Hello students, let me welcome you on One Course Academic Partners again. My name is Masbulela Mqor. Today we are continuing from our part 2 where we were calculating the profit or loss on sale of an asset, and then we also calculated depreciation for the year. So if you haven't watched our part 1 and part 2, please go back and watch our part 1 and part 2 of our session. What we are doing, we are revising grade 12 accounting. So now we are starting with November 2022. So this is question 1.3. We are in question 1.3 today, no income statement. I'm not going to have enough space because I'm using a computerized system to make my session. I'm not going to have enough space to display all the information. Today we're just going to work with the other incomes only. I'm just extracted information from additional information and from trial balance as well, and I've also extracted that part for other incomes on your answer sheet, so that will assist us to answer those questions. So we are going to do other incomes only today. Let us go to our questions. As I've already said, that I've just extracted from your answer sheet. These are the what I've extracted from your answer sheet, and then these ones are from your trial balance, and then these ones is from your additional information. They are going to assist us. Then you see, if you see on your answer sheet, commission income is already given there. And then we know when you look at the trial balance, there is a rental income obviously should be here. And then I know that the bad debts also should be here because we are out the additional information. And then the provision for bad debts is here because I've already made the calculations and proved it should be here. If it was not going to be here, I should have not included it here. So we are going to start by calculating the rental income. Let us move to the additional information. On the trial balance, we are given that the rental income is 183,600. Then when you go to the additional information and read, what are they saying? A tenant has been leasing office space on the premises since March 2020. She has paid the rental until 3rd April 2022. Note that the monthly amount was reduced by 1,350 with effect from 1 January 2022. So here, as we said in our previous question paper and our previous session, that our accounting period starts from 1 March 2021 up to February 2022. So anything beyond February, it should not be included on our calculation. We should take it out. Anything beyond February. So we are told here that the rental is paid up to 3rd April, meaning there are 2 months more than our 12 months if it's paid up to April, because it should be paid up to February, then it's paid for March and also for April. This is for 14 months. And down now we are also told that there is an increase of 1,150. This was a trick question. It can give you some problems, but it's an easiest question as well. So what you need to do here, you need to determine the increment first. Calculate the increment from January up to April, up to 30 April, and then you edit back all that increment so that you can know if there was no increment, how much that should have been paid by that client. So let's go. and make our calculations. We are told that he paid there's an increment is 1,350, and this one is from January to April. So we count January, February, March, April, meaning is 4 months times by 4 months. So is equal 1,350 multiplied by 4 months is 5,400. So now we know that from the decrease from January to, I'm sorry if I said it's an increase, it's a decrease from January to April. It's 5,400. So we need to add back that decrease from that amount, from that original amount we are given there. So it's 183,600, and then we add 5,400 plus 183,600. So it's 189,000. If there was no decrease of 1,350 from January to April, this client should have paid us 189,000 from that period they told us that is paid from up to April. So we know this 189 is going to be for 14 months because it paid us from March up to April. So we divide this one by 14 months. This 14 months is coming from from March 2021 to February 2022 is 12 months, and then we add March 2022, April 2022, which is 14 months divided by 14 months, and then we know per month is 13,500. If there was no decrease. So now let's put the decrease. The decrease is 1,350. Less 1,350. So it's 12,150. So before the increase, this client was paying us 13,500, but after the decrease was paying us 12,150. So we were told that the decrease starts from March. We will start from January, February, March, and April. Start from January, February, March, and April. Then our accounting period ends in February. So we have 2 months that we don't want. We have 2 months that we don't want. This amount here, the decrease is already taken into account. So I guess your question is going to be, why you didn't take account the decrease for January and February? No, it's already taken account here. Even the decrease for March and April was already taken account from that 183,600. So now we're just going to deduct the decreased amount of March and April only, because it does not form part of this accounting period. That's what we are going to do. Sorry, I'm just taking an eraser here. I hope you are taking notes as we are continuing with our answering our questions. So the monthly renter the renter that is paid is 183,600. Now we are deducting that 12,150 for March. We are also deducting 12,150 for April. That is equal 159,59300. So we put 159,300. So we are done with rental now. We are done with rental. Let us clean here. We are moving to other additional information. So let us go to additional information number 2. 33,700 received from a debtor whose account was previously written off as irrecoverable was posted in error to the debtor's control account. This must be corrected. The provision for bad debts must be then adjusted to 3% of the debtor's control balance. So now there was this debtor who was owing us 33,600. All of a sudden, we've written off from our books that this one amount we are not going to receive it. This debtor is a bad debt. We are not going to receive this amount. You must take it. And then after some time, the debtor came back and said, "Hey guys, here is your money." And that money is 33,700. So that money was already written off from our debtors. And now it came back. And then the bookkeeper included this amount on the debtor's control account. He deducted it as something that is paid. But no, he should have not done that, because that was not form part of debtor's control, because it was already deducted. Once it deducted again, meaning that there's a problem with our debtor's control. So that amount that is recovered is a bad debt recovered. So we take that amount straight to our bad debt recovered. So it's 33,700. 33,700. And then now we want to calculate the provision for bad debt. But we know that this debtor's account, they took 33,700 out. thinking that it was a debtors control, whereas that amount was already written off. So we need to include it back so that we can know the original debtors control. So original debtors control, we have 2,746,300. And then let's add that amount that was deducted by our bookkeeper, that 33,700, and see how much do we have for debtors, so that we can calculate the 3% and make comparison with the previous provision for bad debts, and then we can decide whether it's an income or an expense. But I've already proven it's an income, but I'm going to tell you how to check it if it's an income or if it's an expense. So now we said it's 2,746,300. Let's add that 33,700, and then we have 278,000. 2 million, not 278. 2,780,000. 2,780,000. That's our debtors. So now let's calculate provision. We're told that provision is 3% of debtors control balance, times by 3%. Down by 0.03. It's 83,400. Sorry. It's 83,400. So let's go to our trial balance. When we go to our trial balance, we know the beginning was 85,400 and it's more than this 83,400. Once our beginning is more than the current, which means it's an income. But if our beginning is less than if this one was more than like maybe 86 or 89, it should be an expense. It should not form part here. This same applies on the profit on sale or loss that we calculated in our part 2. If that one was a profit, it should be here. But now it was a loss, it would be there on the expenses. Same applies here. Our beginning is 85,840. And then the current year is 83,400, which is less than the beginning. That is an income. The other thing you need to take note of, there should be no big difference between your calculations. There should be no big difference. If you are taking by 80, it should be, you cannot take about 20 now. Your bad debt provision for bad debt maybe is 20,000 here. It does not make sense. It should be really close. Should be close. One of the methods I used to see, it should be really close. You know that you've calculated the correct amount. Close. At least it should be close. So the difference here, between this 85,840 minus this 83,400 is our provision for bad debt. 85,840 so it's 2,440 our provision. is 2440. Then we put our 2000 there. 2200 sorry, 4440, man. 2200 is 2440. So let's add our other incomes. 4560 plus 159,300 plus 33700 plus 2440. And then our other incomes is 200,000. Oh, so it is 2 million. No, it's 200,000. Let me erase, yeah. It's 200,000. Then we are done with our question for today. If you have any questions, just write the comment. I've also provided my contact details there. If you have any questions that you would like me to discuss with you, you can also send those questions on my email. You can also send me a WhatsApp. We can communicate. We can do our sessions. We can meet. If you are far, we can meet on Teams. I can give some clarity on some questions. On our next session, we will be discussing other expenses. I hope you found this session valuable and assisting. Thank you. See you on our next session. Bye.